Shiba Inu just flashed a 500% price target signal, and Pepe is showing technical patterns that could deliver 75% gains in the coming weeks. While whales are dumping SHIB tokens and the broader meme coin market is bleeding red, these chart patterns are screaming bullish reversal. But here's the catch. The data is telling us two completely different stories, and I'm about to break down exactly what this means for your portfolio. Gold Rush here, and welcome back to another high-energy episode of Gold Rush Crypto Daily. Today we're diving deep into two absolutely explosive stories that could reshape the meme coin landscape. We're talking about SHIB's potential inverse head and shoulders pattern targeting astronomical gains, and Pepe's bullish wedge setup that has technical analysts going absolutely wild. This is going to be one hell of a ride, so make sure you're subscribed with notifications turned on because you do not want to miss what's coming next. Let's start with this fascinating article from Coin Chapter that's got the entire SHIB community buzzing. According to trader Javon Marks, Shiba Inu may be forming what's called an inverse head and shoulders pattern. Now, for those of you who are newer to technical analysis, this is one of the most reliable bullish reversal patterns in all of trading. As you can see in this chart analysis, the pattern includes a price target of $0.000081. Let me put that in perspective for you. That would represent a gain of approximately 503% from SHIB's current market value of $0.00001274. 500%. That's the kind of move that turns small investments into life-changing money. But here's where I need to pump the brakes just a little bit. The article makes it crystal clear that pattern-based projections remain unconfirmed without corresponding breakout volume and follow-through price action. SHIB has yet to surpass that critical neckline resistance around $0.000014. This is absolutely crucial because without breaking above that level, this entire pattern could be invalidated. Now here's where things get really interesting and honestly, a bit concerning. While we're seeing these bullish technical patterns, the on-chain data is telling us a completely different story. Sentiment data shows that large wallet holders, excluding exchanges, have been reducing their SHIB position significantly. Between April and early June, these whale holders reduced their combined balance from 751 trillion to 730 trillion SHIB. That's a decline of nearly 2.8%. This is exactly the kind of divergence that keeps me up at night analyzing charts. You've got technical patterns screaming by, but the smart money, the whales, are literally dumping their bags. It's like watching a tug-of-war between hope and reality. The broader context makes this even more compelling. The token has dropped 11.42% over the past 7 days, and it's currently trading at $0.00001274 with a market cap of $7.51 billion. The 24-hour trading volume stands at $141.6 million, which actually isn't terrible considering the broader market conditions. But wait, there's more bad news. Other top meme coins are also showing serious weakness. Dogecoin, the grandfather of meme coins, is down 16.04% over the same period. This tells me we're dealing with sector-wide selling pressure, not just SHIB-specific issues. Here's what really concerns me about SHIB's prospects, the ecosystem usage data. The article points out that Shibarium, which is Shiba Inu's Layer 2 blockchain, has seen its total value locked fall to just $2.33 million. This marks a massive retracement from the protocol's peak of around $7 million earlier in 2025. That TVL decline is absolutely brutal because it shows a reduction in user engagement and capital inflow into SHIB's ecosystem. Without ecosystem activity to reinforce bullish sentiment, these technical patterns alone might not be enough to drive sustainable upward momentum. Looking at the 4-hour chart, SHIB is currently below a descending trendline resistance extending from the mid-May high of $0.00001604. The current price action is hovering around the 0.236 Fibonacci retracement level at $0.000127 just above that key demand zone between $0.000122 and $0.000125. If this support zone holds, and that's a big if, Shiba Inu could potentially rebound toward immediate resistance levels at $0.00001329, $0.00011368, and $0.00001385. These levels align with the 50, 100, and 200 EMA lines respectively. The relative strength index is currently between 39 and 47, showing mildly oversold conditions with no strong divergence. Volume has also decreased steadily, which signals hesitation among both buyers and sellers. This is classic consolidation behavior, but the question is, which direction will it break? If you're holding SHIB right now, smash that like button because I know this analysis is giving you some serious food for thought. Now let's shift gears to Pepe, and this is where things get absolutely spicy. According to this article from CoinChapter, Pepe formed a bullish falling wedge pattern on the 4-hour chart on June 5, 2025. For those of you who trade patterns, you know that bullish falling wedges are absolute gold when they play out correctly. Let me break this down for you. A bullish falling wedge occurs when price declines between two converging downward trend lines. It usually indicates weakening selling pressure and a possible bullish reversal once the price breaks above the wedge's upper resistance line. The key here is that sellers are getting exhausted and buyers are starting to step in at higher and higher levels. At the time of formation, Pepe was trading at $0.00001140. But here's the kicker. The projected breakout target stands near $0.00002000. That's marking a potential 75% price increase if this pattern confirms and plays out. Now, I need to be honest with you about the current technical situation. The price remains below the 50-period exponential moving average, which is acting as dynamic resistance at $0.00001237. This means we need to see a decisive breakout above both the EMA and the wedge resistance line to activate this bullish setup. Volume has declined during the wedge formation, which is actually consistent with pattern expectations. This is exactly what we want to see, declining volume as the pattern forms, followed by a surge in volume upon breakout. That volume surge would validate the bullish reversal and support that 75% price target. The directional movement index on the 4-hour Pepe chart is showing some really interesting signals. The positive directional indicator printed 23.20, rising above the negative directional indicator at 15.09. This positioning signals a slight advantage for buyers, which aligns perfectly with our falling wedge thesis. However, and this is important, the average directional index came in at 18.23, staying well below that critical 25 threshold that defines a strong trend. This suggests the market remains in a weak or indecisive state despite the bullish positioning. The RSI situation is particularly intriguing. The 4-hour relative strength index for Pepe dropped to 35.69, moving closer to that oversold threshold of 30. The RSI moving average stands higher at 47.43, indicating recent downward pressure. Here's what I'm seeing. The gap between the RSI and its average suggests weakening short-term momentum. While the RSI hasn't entered the oversold zone yet, its current level reflects reduced buying interest. But here's the thing. This could actually be setting up for a perfect entry point if buyers start stepping in. Looking at both of these setups, we've got two completely different scenarios playing out. SHIB is showing us a potential 500% move based on technical patterns, but the fundamentals and whale behavior are screaming caution. Meanwhile, Pepe is presenting a more modest but arguably more realistic 75% opportunity with cleaner technical signals. If I had to pick between these two right now, I'm honestly more bullish on Pepe's setup. The falling wedge pattern is cleaner, the volume dynamics are more favorable, and we're not seeing the same level of whale dumping that's plaguing SHIB. But here's my take. Both of these plays require patience and proper risk management. Don't go throwing your entire portfolio at these patterns based on one analysis. Scale in gradually, set your stop losses, and always remember that no pattern is guaranteed to play out. Make sure you subscribe and hit that notification bell because I'll be tracking both of these setups closely over the coming weeks. Drop a comment below and let me know which setup you find more compelling, the SHIB inverse head and shoulders or the Pepe falling wedge.